Let's connect with Mitul Shah, then, who's joining in from Reliance Securities to give us his view on these stocks. And, there was certainly a spot of green in yesterday's very tempered trading session. But, Mitul, the question is, given that, these companies have close to 35% of their input costs coming in from crude derivatives, how much of a thrust or a positive is it that crude is clearly seeing it's one of its worst starts to the year?
See, these companies have been taking price hikes regularly, but somehow due to sharp run up in the commodity prices, that is particularly crude prices, these people could not pass on entire burden to end customer, and they're passing in a phased manner. That is why it resulted into under recovery for tire companies. But now what is happening? The prices of the crude and other raw materials already coming down since past few months, though it suddenly came down very sharply in last few days, but earlier also it was declining from the peak level. But on the other hand, all these tire companies have been increasing the prices despite price correction in the raw material. So that is why we believe that this under recovery will completely go away and these companies will go back to their double digit margin territory very soon. And we expect this price hike to continue even for next one or two rounds, because these tire prices of commercial vehicles are still below the required level. And as you pointed out rightly, that CV segment, buses and trucks are still recovering very well compared to two-wheeler or other segment. And if I'll tell you in terms of ticket size or the prices of these products of the commercial vehicle tires, it's 3x to 4x of the value of the prices this PV segment. So we believe that this positive traction will continue and margins will go back to their double digit territory.
Right. Mitul, hi, good morning. Just wanted to understand whether it's only the pricing push or you think there's headroom for further demand push as well.
In terms of demand side, as we all know that on the OEM PV side, there is a strong order book, but because semiconductor issue is restricting the production, but still demand remains reasonably strong on that side. On the other hand, commercial vehicles started picking up since last 1 year and continue their positive traction. Even these numbers for month of December were very strong. But on a positive note, bus segment, which was not doing great, has also started giving more than 100%, 150% kind of a growth since past few months. And as I pointed out, in value terms, the value of the tires of trucks and buses is much higher. So despite two-wheelers not doing great, we believe that OEM production for this passenger vehicle and commercial vehicle will continue to remain strong. On the other hand, replacement demand were subdued since last 1.5 year. That will also improve now, and it has already started improving since last 1 or 2 months, which the companies indicated in their commentary during last con call, both C8 as well as Apollo Tyre. So that will also benefit. Also, demand side we are not much worried, and on the raw material side, as we all now witnessing, these prices are coming down. So there will be definitely dual push for these companies' profitability going forward.
So, Mitul, for every 10% change in the RM cost, how much of an EBITDA gain does it translate to?
So overall raw material basket for these companies roughly in the range of around 60-70%. So every 10% change is certainly a big number, 700 basis, but this cannot be calculated in that way, because part of this cost benefit they will definitely pass it on. Part of the cost is also comes with a lag effect, as they need to give compensation to the vendors and all those basis. But broadly, we believe that this can result into 100 to 150 basis improvement every quarter now onwards, probably for next 1 to 2 quarters at least. So overall margin can be at least 200 to 300 basis higher in next 6 months for these companies from the current level, provided they would retain all the sizable part of the benefits with them rather than passing on, or there would not be any competitive pricing pressure between this tire manufacturer, then margin can certainly expand.
Interesting. So, tell us which are your top buys from within the tire sector and what are the price target revisions that you've undertaken?
So C8 and Apollo tires are our preferred picks within tire companies, and within these two also, we believe that C8 would do much better because its entire business is India centric and Indian market is doing really phenomenally good. Compared to that, Apollo Tyre has a sizable presence in Europe region, and Europe is witnessing slowdown in last few months. So there could be some near-term pressure for Apollo Tyre in terms of the growth would remain restricted, though it will continue to growing. But C8 would witness a much better growth and profitability compared to others. And we have at least 20%, we can see 20% upside from current level for C8.
Joining in, sharing with us your outlook on those tire stocks. There was certainly a buzz in yesterday's trading session.